down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
Ladies and gentlemen, we're talking about taxes. I know it's not sexy, but hey, I'm not sexy either because I'm the Savvy Landlord. You can't be sexy with the name Landlord. Well, I'm trying to bring sexy back to taxes, being a real estate investor and all that jazz. You just tuned in to the Savvy Radio Show. Today, I'm going to talk about taxes. Why would you talk about taxes in November? Well, you need to start planning now, for real. Many years, I would just roll on by, act like everybody else, and file my taxes last, or file extension after extension, or business taxes after extension, October 15th, drama, stress. It's not worth it. So I'm going to start getting you going now by the end of the year so you be ahead of the game for 2017. Now, you can get your taxes prepared, done, locked down, no stress, and then file them later if you want to. But be on the front end, okay? Start thinking about your taxes all the time. I did the episode with my tax accountant or accountant, CPA, whatever you want to call the guy. You know, mid-year, they called me, hey, we need to meet. I'm like, oh, no, we don't. And they're like, yes, we do. We need to hedge for the future. And I'm just so glad they called me and that they're proactive. So I'm going to cover 10 tax deductions for landlords. So I was Googling this up. I've been reading a tax book. And these are pretty common. These I didn't write these, but I just did some extensive research, and it was pretty powerful what I found out there, that millions of landlords out there are paying more in taxes than they need to be. I remember a guy I used to hang out with a lot, and I'm like, who does your taxes? He says, I go to H&R Block. What the H&R? You're going to trust a $15 an hour employee behind a desk? No disrespect, that's a good job if you're just starting out, but they don't have your best interest in mind. So would you, I know there's landlords out there that go buck wild when the AC is left on a job site. That's me. Or when the lights are on at a job site. I go ballistic. No one takes care. You like that little sound of the cutting the grass outside? Anyway, so we're going to, chainsaw massacre up in here because we're going to slice and dice some taxes. All right. Know the benefits. And if you hear this more and more over and over, you'll know. Stop failing in the real estate game by not taking the most tax deductions legally as possible. Real estate provides more tax benefits than any other investment. So stop losing money, earn money, make money, go buy assets, and let's cover these quick 10 down and dirty. Interest is often the landlord's single biggest deduction expense. Yes. Okay. I never really thought about interest, but you can write off anything that you borrow money on. You don't pay tax on borrowed money, and you write off all the interest on your credit cards, goods and services, everything. Interest. Write that bad boy off. 2, depreciation. Man, when I started this game, I never really thought how powerful depreciation is. So let's just start thinking like 20 G's. Okay? I think everybody likes to put 20 G's bottom line in your pocket, right? I would. Sure enough, that's a vehicle, correct? Well, let's just think of it real simple. Say you got 10 units. Hopefully you'll have 10 units relatively quickly. On an average, let's say you depreciate it out $2,000 a year per asset. That equates to $20,000 that goes against your profit of income that you would have to pay tax on. That's a pure deduction, depreciation. That's profit in your pocket. And it's the actual cost of the asset. So when you're acquiring an asset, some people, like I do, buy lemons to make lemonade. But sometimes you have to put some capital improvements in there, but you want to get the right value and you want to know how long you're going to depreciate it out. It's like 27.5 years. So know what you're doing with this asset, and so you can depreciate this mother down and put money in your pocket. Many years I forgot that depreciation plays a big role in your game as a real estate investor. 3, repairs. You can deduct all repairs. Now, they're cracking down on this, and it makes sense because there's a lot of sketchy landlords out there that just, and just do some mad stuff and just say that's a repair, versus a cost or capital improvement. Okay. But you need to get fully deductible the whole amount that you incurred. So anything that's the word repair, okay, repair would be repainting. It's already been painting and you're repainting it. You're fixing. Anything that has the word fixing gutters, fixing floors, fixing leaks, fixing drywall, replacing windows that are broken. Okay, so it's a fine line, and I know we all work the line as hard as we can. That's what we do as savvy real estate investors, but still, are you really writing these things down properly and getting the right actual amount that's due you? Okay, repairs. Travel. Number 4, local travel. You are entitled, yes, you investor, landlord, whatever, involved in writing out, I think it's 50 something cents per mile, and you got to keep track. I went over an episode called Mile IQ. Every time you hop in the car and go look at a rental property, go check on a property, deal with tenants, go to the hardware store, go to Lowe's, Home Depot, go to get a part, that is 100% deductible. You need to utilize that. Okay, make sure that you're deducting the expenses. Now, some people do deduct actual expenses, gasoline, upheat, or some people do it like a write-off. I think the biggest and best return for me is writing off the mileage, okay, the standard mileage. Number 5, my favorite, long distance travel. Overnight for your rental activity can be deducted, like your airfare, hotel bills, and other expenses. Now, people get a little wild, and I've been reading some tax books that says that it's supposed to be 50% of all your food, and unless you cater something in, and that's considered a business expense. So when you're traveling, make sure you write off all the deductions. Why are you going to this location? What are you doing? Hopefully it's a savvy investor real estate, investorweekend.com coming in April event. What is it? Document it. And you can, mix a little bit business with pleasure, but just take the proper deduction and don't whore it out or hurt, your reputation with the IRS. They closely scrutinize deductions on overnight travel. So like I just went on an out of state event, and I did have my family with me. I deducted the things that I knew I could deduct as a real estate investor, and some meals that I did not have that I didn't have with my family were deducted, and the meals that I just had by myself with my family I paid out of my own pocket. Keep it legit. All right, here's another crazy one. Number 6, home office or office space. Now, I've been reading some books, so I'm kind of getting jaded about stuff, but I found out that, I'm assuming that you as a real estate investor, you should have your cell phone paid for. Okay, I'm talking about home office, but your cell phone. Well, I read I don't know if it's code, but I've read some books. It says that you can write off your cell phone, 100% of it, but you need to still have a home phone. So I know a lot of people out there don't have a home phone. How did I get away with that? I got a track phone at the house for an emergency. I use both. Does that make sense? So also your home office is a certain percentage, and I'm assuming a lot of people try to get over on the home office. It has to be a dedicated thing, but a lot of people just skip over the home office. If you got a computer in a room, it's a small percentage, but hey, it's a free tax deduction. You need to write it off. Obviously, if you have an office space that you rent or you have, that isn't a deduction already. Number 7, staff and independent contractors, whether you're hiring anyone to perform services for you. I mean, it's pretty common sense. If you don't know that, their wages, the rental business, whatever it is, it's 100% tax deduction, independent contractor. Now, when you have an independent contractor, make sure you document them properly. You can't just be writing people checks and expect the IRS to believe what you're doing. I know there's a lot of shady people out there, but it's called a W-9. You need to service a 1099. You need to W-9 everybody, and you need to cross your T's on everyone. So for years, I've been paying a guy, and he gave me false information. Now the IRS is climbing all over my back and sending me all these forms and affidavit this and affidavit done by. Who's David? Right? That's what I'm thinking. The affidavit. Yes, I paid this guy. He's a painter. He's still around. Oklahoma City. Come check him out, IRS. But his paperwork was jacked up, and they're all over me about it. Do it on the front end. Don't be a joker like myself. All right. Here's another thing that, I learned from a friend years ago that operated a store. And I don't know what code this is, but I call this number 8 theft of losses or casualty or whatever. I call it lost business in my world. For example, you have an office building or a retail location, and they're tearing up the front of the driveway to put in a new sidewalk. It seems like in Oklahoma City, everywhere they're putting in a brand new sidewalk. I'm down. We need to walk anyway. We got chubbed out here. But it's causing, when you got the little cones up, people can't get into my establishment. Thus, I am losing revenue. Thus, I can write that off. I can obtain a tax deduction for those losses. Now, obviously, you got to prove those losses, but I think that's something that you need to get with your accountant about and find out how you can deduct those off of your taxes. And so a casualty loss is this. One time, I had a massive loss on my apartment building. It blew up. 3 units were destroyed. I, lost rents. So something that you want to get with your accountant on, your CPA on, and make sure that you are getting the proper deduction. I think I've said that like 10 times. So, we only got 2 more left. Number 9, insurance. Yes, I don't know if you know this, but you can deduct all your premiums for any insurances for your rental activity. Of course, get the decent amount of insurance. It's 100% tax deduction. Include fire, theft, flood insurance, rental property, liability insurance. I definitely get that. Now, I was having lunch with an investor today. Yes, Russell Hunt, OG. And we were talking about the Obamacare, what's going on with the political movement. The world's going to end on November 8th, blah, 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 blah. Well, everyone in Oklahoma, it's just we only have one insurance carrier in Oklahoma. That's just how gangster this whole Obamacare has been. And I'm not dogging Obamacare. I think it was a great concept. Everyone should be insured. Granted, I get it. Well, which caused some issues with insurance companies. They weren't making money. God forbid that they don't make money. So a lot of insurance people left Oklahoma City, and we only have Blue Cross Blue Shield. Now, our necks are getting stomped on because they're charging these outrageous premiums. My homie is paying $2,000 a month premium with a $13,000 deductible. He equated it to, it's like he's got to spend $36,000 before his insurance kicks in. It's some nutty deal. And I'm like, wow. And I was like, hey, isn't that a tax deduction for you? He's like, no. If it can't be, because if I do health insurance for myself, I have to do it for my staff. He has W-2 employees. Fascinating. So if you have employees, you can deduct the cost of health and workers' comp insurance, but you have to be across the whole board. It can't just be for you and somebody else. All right, number 10, legal and professional services. So you should hang out with an attorney here and there and learn from them, from accountants, property managers, real estate investment advisors, professionals, coaches, books. All that can be written off 110%. If you hired me as a coach, let's say you came down to Investor Weekend coming up, it's 100% deduction. You staying in an Oklahoma City hotel is a deduction if you're living in Indiana or Michigan or Detroit or wherever you're from. So, you should invest some of your income into yourself. The more you know, the more you make. So that was the top 10. I don't know if it made any sense to you. I'm trying to break it off and help you think of the future of what's going on. So when I Googled this stuff up, I found some interesting things. It said landlords can generally increase the depreciation deductions they've received the first few years they own a rental property by using segmented depreciation. Didn't know that. Obviously, carefully planning and permit you to deduct a single year the cost of improvements of rental properties that otherwise you would deduct over 27. Did you know? you can rent out a vacation home tax-free in some cases. Did you know? I believe that one is if you, for 2 times a year, you can rent it out for yourself as a vacation home, only 2 weeks out of the year. I don't know that law. I'm not big balling like that, but hey, most small landlords can deduct up to $25,000 in rental property losses each year. Did you know that? Let me say that one again. Most small landlords can deduct up to $25,000 in rental property losses each year. A special tax rule permits some landlords to deduct 100% of their rental property losses every year, no matter how much. Interesting. People who rent property to their family or friends can lose virtually all of their tax deductions. Did you know that? Anyway, so this is not to scare you, but to educate you and move you forward. So in the right direction. Stop putting your head in the sand. Wake up. Get locked down on these taxes. Organize. Keep track. And buy more assets.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook and always be buying assets.